Welcome to the Trading Lounge and the day ahead report, and here we're looking at the US 30, and this is a rather important juncture for the price because this is the top of minor group 1. So we've got 13,000, which is a major trading level, then we've got 100, 200 and 300. And when a price finds support on top of a group 1, be it subgroup 1 or minor group 1, once support is found on group 1, then it separates the thinking, the psychology from the closest largest number, which would be 13,000, and then we can start looking up. And if we're looking at the Fibonacci numbers, we'd be looking at 1, 2, 3 and 5 would be the next number. So 5 being the second strongest number, we would see a decent sized correction there. It is normal when working with group 1, when we get the arrival here, is that we see a larger correction through here. This is a little bit tricky to count through up here. It can be counted in a couple of different ways, but pretty much looking for a wave 4 to unfold, which normally pulls back to the wave 4 of 1 lesser degree. So look, it's normal, I know, to see the price fluctuate around the top of group 1 and come back into the pivot area here, 13,200, or whatever level that would be, whatever group 1 that you'll be working with, but the pivot within group 1 essentially. If the pivot in group 1 becomes the resistance, then we'll see the price back at this point here. So that's something to look forward to. So we can expect a series of swings across this level here before we can actually work out if it is support or resistance, because seeing is believing, and after a corrective pattern here, if this is support, then fine, then we go up to the next level. It's pretty much as simple as that. The Elliott's a bit of a guessing game at sometimes, and other times it's we can use it with a fair bit of confidence. In using it with a fair bit of confidence, the main trend, as you can see here, is to the upside. And also supporting the push to the upside too would be the yields here. So with yields going to the upside, stocks will also be going to the upside and treasuries to the downside. So that's pretty much what's sort of happening here. So we're looking at this particular pattern here being a corrective pattern, probable a triangle pattern this is a 4-hour chart. So once this is complete here, we'll see treasury yields push to the upside, and of course stock indices will follow that to the upside. So so look, the S&P 500 is very much the same as well at 1430, which is a subgroup 1 level here. So we're just seeing the first high above that. We've also got this 144 here as well, which is the only number Gann and Elliott meet at. There's a lot of difference between the two ratios that they use, but this 144 will square the market up in one way or another. So we can see perhaps a wave 4 come down through to here. It's quite clear to count 1, 2, 3, 4 to here, 4 to here, and then 5 up through to here. So it's also too with wave 4s. Wave 4s normally break trend line channels as well. So that's just what they do. So we'll see perhaps a larger correction across the 1430 there. The FOMC Fed's meeting is today. Well, news has already come out about that, being just generally positive about the US economy. So that's what buy the rumour, sell the facts sort of thing is occurring through here. The European markets are the same. The Australian market is much the same as well. We've seen profit taking, so to speak, at the 4600 here yesterday on the cash market, and we'll see that sort of slightly recover today as well. But the trend coming up through here, our target was the 4600. The thing here is that we've got the arrival, the reaction, looking for support. We're looking for the first high above the level, and then we'll see a larger correction across here. That larger correction across here should stay in the trading range of top of subgroup 1 to the lower end of subgroup 2 there. So that's the range. I know it's a pretty wide sort of situation, but it's just the way the cookie crumbles. It's just normal when you're using the levels to trade to a number and get out wait for the correction. There can be, half a dozen different types of corrections. There's 11 or 12 corrections in Elliott, so to speak. Debatable, the 11 or 12. But either way, I've always just found it's better to go find another market to trade once you've reached a large number. So that's what we can sort of expect there. But once again, the trend is to the upside. And if support is ever, if I'm wrong here, we don't get a larger correction through here, then support on the 4630, the top of subgroup 1, would help us separate the thinking from the 4600, and traders will starting to think of the 4650. The 4650 here also too, I can just sort of mention, it's just like a normal midpoint, but it will have a bit more impact here. I don't know why, but I just call it the 65 number, the 65 in the middle there. It just seems to carry a bit more weight, as does 56 as well. So wherever you see 56, it carries a fair bit of strength, not as much as 72, but it's just worth noting and worth working with and having a little bit more patience and time at those particular numbers. Alrighty, well, let's have a look at commodities. Copper has seemed to sort of closing up a little bit stronger as the US dollar index pushes lower. And that's another thing too, we're looking at the yields just then as well, as these US Treasury yields be pushing to the upside, break to the upside here. We will see the US dollar break to the downside, and also the euro in line with that as well. So we really just need to pretty much work through this little bit here, and it has been a little bit tricky with the with the markets because of the Fed's meeting today, but now that's over, we can see the market settle a little bit. All right, let's have a look at those commodities. Okay, looking at the copper market here being quite central to base metals. Look, it's the couple of things here is that we're in a trend to the upside. A trend has a beginning, a middle, and an end. And if we had to find the beginning of the middle of this trend here, which is something reasonably easy to identify because it's pretty much always the strongest part of the trend, generally speaking, and that would be in the middle here. So we can normally just go, well, if that's the middle there, that's half of the trend there. That's the beginning of it. That's the middle of it. So we can pretty much add that distance to this distance here. So we've still got further to go to the upside here. That we're working through group 2 here, the 65, the 72, and the 80. And look, as bottom line, as long as the market really stays within group 2 here, everything is pretty rosy. We expected a correction at the 65. We got it. We're going to expect a correction at the 72. So that's going to unfold. I thought this may have going to be pulling back down into the fourth wave 1 lesser degree, and that can still occur as well. It's just that the Fed's meeting has just sort of created a bit of emotion into the market, so we need to wait for that to settle. But we can be assured that there will be more corrective patterns coming here, and the main point is that it's stabilising the materials sector, in Canada and of course Australia and so forth. So that's the main point there, and the other metal, the precious metals, there's always a bit of a relationship with that as well, to a point. This couple of things here. We're not really quite sure on the wave count here, but what we do know is that support on the 1720 would give us a long trade from that point. It would add a bit of strength into the market at that point there. While the market is above the closest largest number, then we need to treat it in a positive manner. But the Elliott count was suggesting that we're going to have another leg to the downside, so we need to be mindful of that as well. I don't really know what to say about this. Let's just let it settle a little bit. If support is found on the 720, then we can add to the position if you're long from that point. But what I do sort of recognise too is that from this low point here, we've actually got a little wave 1, wave 2, wave 3, wave 4 here, ABC, and a wave 5 here. So it will be interesting to see if we get an A and a B and a C back into the 1700, and we'll see how it sits at that point. If after that it finds support back up onto the 1710, then we've got a positive bias for it at that stage there. And much the same with silver too, as 33 is the line in the sand for silver, and add that as support or resistance, and at the moment it's support, so that's on a positive side there. Let's have a look at the Forex. Okay, the US dollar, I'm just going to start from the daily chart again as well, is that we're looking for this structure down through. Basically, we've got a little ABC structure here, and we're looking for further downside. We've got our wave 1 to the downside. We're looking for wave 2 here. Wave 2 can be in terms of an A and a B and a C wave for wave 2, and then we go down for wave 3. But this can also be counted to here as well as wave 2 to there as well. So we're monitoring this particular move down through here, and as this unfolds in 5 waves down through here, then we would be looking at a little wave 1 to here, wave 2 to there, wave 3, 4 and 5 for wave 3. So we're monitoring that as well, and that's certainly on the case as well. So that would put the euro the same thing to the flip side as well. So let's just have a little closer look at that situation there. So just to go over that, that's the first wave down for wave 1. We're looking for wave 2 to come back, which is the A wave, the B wave, and the C wave to here. So I didn't update that, but that's pretty much over to there, to there. Get rid of that, and that's the B wave to that point there. So we're still looking at this scenario through here as it is, but this also counts reasonably well down here for a 5-wave structure. Now, if that's the case, then we would have to have this down as wave 1 here and back for wave 2 into here, and then wave 3 down. So we can just drill into that a little bit more through here. So just forget all this for a moment, but if we just look at this here as down for 1 here, back for 2 here, and then this would be 1, 2, 3, 4, 1, 2, 3, 4, 5 to here. So yeah, look, it's let's just see how the retest goes. So what we could sort of expect is we could expect from maybe one more push down through here, or it may already be in here, but basically a retest back into here. If that retest here, there will be a reaction there, and it'll come back to here a bit, and then maybe push up through here. But if it does push up for the C wave, then that's fine. But if it pushes up to retest the 80 here, and then it starts to move back down, especially finding resistance under this group 2 here, the 79, 72 there. If that's the case, it gets locked under here after the retest here, then we'll know we're going much further down and much quicker as well, and the euro would be the same to the upside as such. So when we're looking at the euro here to the upside, now because of the Fed's meeting, markets have been sort of pushed along a little bit, but yeah, so what we can expect here is much the same as I just mentioned on the US dollar. So we could have the fact that we've got 5 waves up through here, and then we would have an A, B, and C back into the 130 area here, and then continue to push straight up. So we wouldn't get this A, this B, and this C wave back through here. That's our primary count. But we just need to see how it settles in through here, because a little push up through here, making a new high here, would cancel out that being a C wave and a wave 4 here as an A and a B and a C. We would have to consider the corrective pattern being all wrapped up in this first leg here. So if I've got a smaller picture of all of that there, it's a bit tricky going in here on the 15-minute chart here, but Just sort of nailing that down a little bit further into the current situation is that we can see that, I mean, this is a really good setup here. I mean, it just, for the trading levels, it doesn't really get much better than this because it's got its arrival, its reaction, and then there's two types of corrections in my book. There's corrections that go sideways, and they're the strongest corrections because they're just correcting in time, where other corrections, like if this was going to occur through here, that's correcting in price. So that's obviously sort of weaker. But markets that go sideways tend to have stronger pushes to the upside, and that's also to the downside as well. So if the market was coming down through here and then vibrated sideways through here, then it would move down real quick as well. So that's worth noting. It's the other thing noting too while we're here, it does, you can see this is a 15-minute chart, but if you had it on 5 minutes, you'd see this, the group 1 in here, the 10, the 20, finding good support in here, and you can see that it's got a bit of a it eventually got support on the top of subgroup 1 here, and that's kind of what you're looking for. And sure, you may not have got the perfect break, but you can see that it's retested in through here, and it's pushing to the upside there. This is based on the Fed's meeting, but just still the pattern itself. It's the volatility's in play. It's all positive, so that's a really good setup to scale in through Group 1. That's quite a good setup for having support on top of subgroup 1. Normally it may not have moved that quick, but because of the Fed's meeting. But look, anyway, if that's counted as a little wave 1, wave 2, wave 3, wave 4, we'll see a wave 5 come up into this area through here, and then a larger correction here. Now, this correction could come down as part of the whole C wave coming down, or just as an A and a B and a C correction coming back into play here. So we'll do some more work on that because we want to look for the setup to the long side with this. The Australian market here, this is just the daily chart here, and excuse me. I always sort of felt like this was a bit of a sort of a spring here, and really nice sort of strong and solid support here. We're still looking for, it's normal to look for support above the 105 here. But you can see that, I suppose what I'm trying to get at here is that when this market moved up through here, it hadn't moved up from a base. It had overlapping wave structures, so it was kind of weak in its way, in its own way, and the same as here as well. But this one's coming from a base structure here. There's a lot of volume in here. It's an accumulation process in here, so it's got every right to continue to the upside. Well, the bias would be to the upside in that case there. Now, yes, sure, it can come back down and retest it and all the rest of it, and get all sort of ugly across here. That's possible, but it does give the opportunity for this to continue up through here because it's done its kind of accumulation process here, and that's what a correction is really. Sure, it's profit taking, and there's stops being taken out, and then there's value buyers coming in, and then they run out, and it folds back, and they collect stops, and more buying goes in at those low numbers. So it is a slow accumulation process and a correction, and that's kind of what occurred through here. So it does sort of offer the upside. Now, the upside would be if this high here was taken out. So this high here at 106.23, depending on what program you're using. So I did put in there 106.30 to have a nice sort of clean break. But that, in Elliott terms, that would be creating new highs through here, and also a more positive trend to the upside through there. So that's something that we have been looking at, and I have through the morning report here, we have been looking at just bear with me a second here. What I wanted to try and do is just focus on the next step in here a little bit. What we could do here is we were counting this as a possible up for 1 here, back for 2 here, 5 waves up for the third, the fourth, and then another little 5 waves here for the fifth wave. So that fitted quite nicely. Then we've seen this pattern through here, which was a corrective pattern. So we know that it's a corrective pattern, so we know that that high will be taken out of place here. So we've seen the market push up here quite strongly. So we can pretty much start reworking this particular wave count into a larger structure that's developing. One of the aspects that we can look at is that this wave 4 here shouldn't really overlap the wave 1 here. It's okay in derivatives, not okay in Dow transports, industrials and so forth, but in leverage products it happens a fair bit. There's only 3 Elliott rules, and this is the weakest one, and this occurs to be broken a lot when dealing with leverage products. But we could start looking at this as up for 1 here and back for 2 of 1 degree, and then this up here for wave 1 and wave 2 of the next smaller degree down. So this would be up for 1 and back for 2, and this would be a third wave unfolding up through here. And in the third wave we would have up for 1 and back for 2, and then also this again here up for 1 and back for 2, because it is starting to stretch out a bit. You know, it's starting to expand and get some legs and so forth. I'm not sure about that just yet, but it's something that we need to have a look at, and that's what we'll be looking at over the next few days, and we can focus on that over the weekend as well. So just drilling into this a little bit further through here, now that we've had that sort of sharp push up through here, it was running to the upside based partly on the Fed's meeting as well. The Feds had their little meeting, so a bit of buy the rumour, sell the fact type of thing. So what that means there, we can be looking at a topping situation within this little area through here now. So all we need to do here is this is just the 1 hour chart, is just allow it some time here. If the 72 here becomes the support, then you can glean a small position there, add another position on top of the 80 and trade up to the 106 there. I don't know if I've got that on a smaller one. Okay, so here we go. So it's just a 2-minute chart here. So this is all really good. It's really good that it's shot up there, and this can be counted as an ABC correction through here because it is in 3 waves here. So if support is found back on 65, you could go long there. It's higher risk, so you need to keep the stop under whatever previous low comes in here. But if you want a bit of a safer trade, then look for the 72 to become support there, glean a position there, glean some positions here, and take a bit of profit, perhaps at the 90, or add on top of the 90 and off to the 106 area from that. If this doesn't get back up there, well, that's fine too. Then you don't get that trade. It's you'll see the price back to the to the midpoint here, but yeah, just allow that to play out, because you don't want to go along from here while you're facing these resistance points here. You need the market to prove to you that it has got support, and yeah, that's it. Pretty simple game of snakes and ladders. Alrighty. That's it, I think. All the currencies are pretty much working together here. So this is just the market correlation through here. And if they're out of whack, well, then I normally sort of know about it. But they're all pretty much sort of bobbing along together. The New Zealand US dollar there's all going pretty much the same. The Euro New Zealand dollar and the Australian New Zealand dollar all have the same wave count as well. So all pretty simple at this stage. Alrighty, well, good morning and good luck.